I've been having a few people reaching out saying that support resistance areas don't work, they're crap, they've been outdated, they've been stuff that people should have never worked. And it's a common pattern we see with not just support resistance areas, but a lot of tools in trading. People love to see tools outdated, don't work, and then bash on them and like share this new way, this new fancy way of doing things, of trading. Now maybe it might be supply and demand, it could be a different thing, it could be these smart money concepts. Doesn't matter, there's always a new fancy tool in the market that people love to share about. But today I want to share with you why people think that and how to flip it around to if support and resistance don't work for you, how to make it work, and what are some things you can do to use them to your advantage as opposed to use them just for the sake of using them. So we'll go on the chart, I'll show you how that works out, and it's gonna be, I think, a pretty cool video for you. Alright, let's dive right in. Alright, so welcome back on the chart, and today I want to show you how people are using support resistance areas completely wrong. Now, back when these things were made popular in like many years ago, I cannot remember the dates for sure, there was a really good concept with these areas, and that was that price will go back between a resistance, so a higher level, and a support, so a lower level. Now, price would only go back between these zones when price was sideways. It makes sense. If price is in a sideways market, so if you've got a top here and a bottom here, price is likely to go back between these zones, right? It just makes sense. Now, people over the years have been using these things as like a miracle solution to, oh, I'm going to trade these support resistance all the time because they work really well. They might go back on the chart. They see, well, price touched back here, touched back here, touched back here. Therefore, when price touches again here, I'm going to buy again on this level. Or they say, oh, well, price has made a high here, so I'm going to have to sell here, sell here, sell here, then sell here. Then I'm going to sell here again when price comes back, or I'm going to buy here again. And they kind of use these zones as a miracle solution. Now, if you know in trading, if you've been in the market for a few years, you know there's no miracle solution ever. There's never going to be a tool that works all the time. All the tools work sometimes. And if you use them in the right market context, they will work. But if you use them in the wrong context, they won't work. See this example here. We've got a support area. Support, coming back to retest again. Now we could say, well, price going back to support. Support, we're losing. Support, just chopped out. We're losing. Then if you keep buying on the support, you just lost your whole account there, or at least a big part of it, right? Same thing here. Resistance. Now again here, we're not in it. Okay, we're getting stopped out. And you see how this doesn't work out anymore. That's the first issue. The first issue is people are using this tool all the time in every market context. I'll show you how to flip this around later, very shortly. But that's the first issue. The second one is people have been using these as a line. Now, you know for a fact that support resistance are zones, but does that mean we can buy when price is close to it, when it's beyond it, when it's before it? Or how exactly can you use that? Like, it makes no sense. So have a look at this, for example. Now, let's say you see this is a zone last year been pretty well identified, but I want to make it more clear. You are here in the market and you see, let's say you are here. Let's just go back and so let's say you are here in the market. Now you've got this nice here resistance area I've been seeing in the past. This is your high right over here. Okay, and this is your support over here, your low, let's say. And now you want to be able to sell this level because that's the obvious. You want to sell at the resistance area. So let's see how price behaves here. So you see price getting to that zone. Now you might want to sell here if you got a nice candlestick to sell. But then you'll see price is pushing back. Now, is this here a good place to sell? We're way past the zone. Are we supposed to sell it here or not? If you're a new trader, you've not been really experienced with seeing these patterns before, you might want to sell. Or you might want to like take a break up. Oh, you see price going back beyond the zone, I'm going to buy here. Good place to buy. Then you'll see prices going again, coming back then within. And you see, oh, well, okay, it's back in the zone. So let's keep going. We should be selling here. And then you see price doesn't even touch the zone. And kind of gets chopped around here. And then goes back to the other direction. Okay. So then you see, well, okay, well, my resistance area here was around there. This level, it went all the way to here. Therefore, this concept sucks because I cannot really look at any zone to sell because we went way beyond it. If you went and bought the breakout here, you got stopped out. If you went and bought the reversal at the zone, you got stopped out too because price went way beyond your entry. So how do we make sense of this? Well, let's talk about how to make support resistance areas work better for you. Okay, and there's two things here. First one I've discussed already is applying it in the right context. Let's write this in my fancy chart here. Okay, the first one is going to be the context. And the second one is going to be actually how you look at the zone. Okay, so let's go through these things one by one. Now, context is quite simple to understand once you understand it, but most people are not using it the right way. These zones should be only working and applied whenever we have a sideways market. When you have a trending condition, these zones don't work at all. You can just forget them. It's pointless to use these in a trending market. And let me show you why. Let's go here and see a pair that was trending a lot. So USD Japanese yen is a really trending pair. You see price here in the past couple of weeks has been really trending. Now, here we have a market that's going more sideways. You see, and we can very easily go and draw this when you have a similar high right over here and a similar low. So let's say we take that low right over here. Now, this is a sideways market. We could, in that market, be trading support resistance areas very well. But once we get to go out of that range, right, we change context to a trending market. Actually, it's sort of still sideways here a little bit, but we're starting to trend a little bit. And then we get to this level here. Well, that's clearly a trend, right? That's clearly going upward. Now, that's a market where you don't want to use support resistance areas. Even if you think you go in the past and you look at these other zones we had before, you could say, well, oh, this one here repeated itself again. Like this high price here made this same high. So support and resistance are a magical tool. No, they're not. This doesn't apply. Forget about this part. Now, we don't want to use any zones or actually support resistance areas when you're on the trend. You could say, oh, well, okay, this here we have a high. Price goes back here, we touch the high. And yeah, it did, but it's not really valid. Because whenever you're on a trend, it could be like this, where price goes back and retest. Or it could be like this, where price does pullbacks. And then the trend is so strong that price doesn't even go back to the previous zone. Now, in that case, support resistance don't apply. They don't work. Because then you could say, well, that's my resistance. My support is here. It didn't touch. Therefore, the tool sucks. No, it's just you cannot apply it in this condition. Okay, so in principle, here we have the high there. The low comes back here. Again, we cannot apply this. Doesn't work. Now, if you try to apply the zones where you were in the past and price was here again, and price did this and did that and did this and did that, you could say, well, that's my resistance here. I'm going to sell. Well, if you sell here, based on this level here, let's see, these are equal. That's still not valid because you're only going to get a bounce here. This is a bounce, and you cannot get much profit from a bounce. So if you want to be selling support and resistance areas or selling or buying, you do it whenever it's a sideways market like this. Okay, that's going to work a lot better. Now, we've still got the issue of the trend here. So when can we start to actually buy these? Well, we can start to buy these whenever we start to have similar highs and similar lows. So here we have a high, we have a low, we have our next high that's over here, we have our next low here. Now see how we can make higher lows and higher highs in this case. Now here we get to our high over here and our high again over here. Then we get to a low, let's say here, or low here. Okay, still higher highs and higher lows. Now we get to a low right there, or high over here. Oh, now we're changing. Okay, that's a change here. But now we've got lower highs and lower lows. So it's not sideways, it's still trending. Now I'm just going to imagine here because we are ahead of us. But let's just imagine that price were to do this and continue like this and do this. Then no, we're not using support resistance areas here because now we're trending again. We're going to the downside, a downtrend. Not good for support and resistance areas. What about if instead of doing this, price were to go and give us something like this? We are here. This is our low. Price goes right here. Okay, and like this, and like this, and like this. Well, then, yeah, that's a good example, right? Then we've got a support here. You've got a resistance here that matches with this high. And then we can start trading on this high over here, okay? Actually, we can even trade this high if we want to. Be a little more aggressive. But we will keep it like, let's go with this one. Now, that's a good example. Then we could also look for buying at the other support when price comes back to retest the support over here. Now, that's the example where we want to be trading these zones, these support and resistance areas, but not when we're trending. Trending won't work well. We're going to have a very bad win rate. And even if you have a good win rate, we won't have a good reward to risk in that case. Here we know exactly what a reward to risk is. We know if we sell here, we can target this low over here, or a little bit before that. So we can always try to target somewhere here if we were to sell there. We know what the reward to risk is, and we have a pretty good win rate. If we do it the other way, let's say we were to sell here at this level. We know where we sell, right? Yeah, we sell here, okay. But then what do we target? Can we target here? Can we target here? Or should we target here? We don't see this price in the future. It's really hard to set a good target in that case. Here we can trade with a trend, but that's a different strategy. So we can enter here, but then what do we target here? Yeah, we could, but that's more like a trending strategy where you have a bigger take profit. So you're going to have to use a trending strategy to look at this take profit here. Different things. Now, remember the issue of that I've discussed before. Let's go back to our text over here. The zone, right? How do we know when price is beyond our zone? And how do we know when we should or should not take a trade? Well, over the years, I've kind of went around this and I kind of had to learn a lot. And I sort of defined my own way of doing things. Now, it's not something I found online. It's something I kind of tweaked myself and developed and kind of thought about myself. I don't want to take the credit here because I probably learned this from someone else anyway. But the way I do it is I'm happy to miss some trades when price goes beyond the zone. But if price comes back within the zone, I'll catch it when it goes back within the zone. So in this example here, that was a good example, by the way. We have price in the sideways market. Now, when price makes a new high with a wick, I'll just move here, limit my zone to just cover this wick because price could go all the way to here again to give us a nice setup. Now, if price is within that zone at any time, I'll take a sell trade when you have the right candlestick pattern. Okay, the right pattern with the price action. Now, here in this example, while we have price going up, and here I'll be looking to sell if you have a nice candlestick pattern, which we don't really have in this case. And then I'll see price go beyond there. Well, I'll say, oh, okay, I'm going to expect a breakout in this example above here. I'm going to expect the breakout. So I'm not going to take any sell trade. I'm not going to take any buy trade too because that doesn't respect my breakout strategy, which is going to be a different strategy completely. And then when I'll see price coming back and touching within the range, so around over here, okay, around this level here, I'll say, well, okay, the breakout fell. We're back in the range for sure. And I can take a sell trade. Now, what I'll do is very simple. Okay, I'll look for a pullback within that sell trade here. And as soon as we get a first candlestick, bearish candlestick over here, like this one right there, I'm going to put my stop loss just beyond the range. So maybe somewhere around here. And that gives me a very kind of comfortable stop loss. I could even put it if I want to at the most recent pullback right over here. And then I'm going to target the next zone. Okay, so the support area, which I want to be safe. I'll maybe do something around here. So let's look at what this gives us here. So we have a nice short position. We enter the market right here at our first bearish candlestick within the range. Stop loss could be either here, more aggressive, and the target would be, this is the zone, right? So I'm going to give myself, this is going to be a 3 to 1. I want to get a little bit more comfortable. I'll do like 2.5 here. There we go. Okay, 2.5 to 1. It's pretty good. Now, if we were to get target here, this one, this zone, I'll do the same target, but it's going to be a little bit smaller target because we have a pretty tight range here in this case. Okay, so that's kind of how I play with this kind of trade. So I'm not afraid of missing trades that go beyond the range and come back. But if price comes back within the range, I want to be in that trade because that's going to be a trade that is likely going to go back to the other side of the range. I know this for a fact from my testing and from what I've seen in the market in many years since I've been trading. So I know these things work really well. So let's look at an example here that doesn't work out too well. This here is an example that would work well for our strategy I discussed because we would avoid some bad trades. See if we have to put a low over here. Now notice how the market is sideways in that case. Okay, we're not going in a trend, we're going very sideways because we have these same highs. Now here we go a little bit beyond the range, but I'm not going to worry about this too much because we're just above. Same candlestick, like the candlestick still touched within the range. I'm going to take a short trade here with no worries. And then we go back within the range. Now when price goes beyond again, let's say price were to come back within the range, we would see price closing back within the range again. In this case, we don't have this. Okay, we have price going up, price going back down, and then we just touch here with our wick, but then we pull back up right away after. So we need to have a clear break within the range. A lot of momentum to go back within the range. In this case, we have wicks, and wicks don't count as breaking back within the range. Okay, so just keep that in mind. Now that's kind of here the example where you would have a losing trade probably with this strategy and with this way of doing things. We have a low here, we have price coming back. Now each time, as I said, price comes back and it goes a little bit beyond the range, I'll adjust my zone to be over here, to the wick, okay? So the support is over here. And now when price comes back to retest again, we have here, and we gonna have some trades, can have some trades again here, but we don't go very far. So here we'll take some losses. Now that's part of the strategy here. We're gonna have some losses anyway, no matter what. If you expect to trade something with no losses, you're in the wrong business. Just understand you have some losses. That's an example here where we will have some losses, but after the second or third losing trade, I'll just cut it and not trade anymore from this case. Because I know price is not giving us what we want, which is to move back to the resistance over here. And if we're not gonna have it, I won't trade in this kind of market. Okay, so first trade, I might take it. Second trade, might take it. Third trade, I'm gonna skip because it's gonna be too much of risk for this trade that doesn't work out. In fact, price goes back lower and we just end up having no trade here. Okay, so keep that in mind. Now, what did we discuss today so far? Two things. Use these zones within the right context, within a sideways context, not a trending context. And make sure you have the right zone, the right level, and don't be afraid to miss trades because you're going to be able to cash them back later. Okay, that's the main thing. If you're always chasing trade in the market like this, always trying to catch the top, that's not going to work out well. You're going to miss out on many moves, or you might actually sell a breakout that won't work. So you want to be careful about that. So hope that was useful for you. Hope you got some value out of this. As always, leave me your thoughts in the comment section below. Let me know what you think. I publish these videos here 3 times a week, so make sure you subscribe to the channel here to not miss out on any of them. And I'll catch you back here in the next video pretty soon. Ciao.